Ladies and gentlemen, K Kim here. Welcome to Daily Update. Hope you guys had a good day trading today. Market is up about 1% there on the S&P, pretty much across the board. I think so. I mean, this is a little more, a little less. It's around 1%. I do know that. I think Nasdaq is about same things, a little more. Dow around 1%. So pretty much across the board, around 1%. They were up quite a bit more, as you can see here, during the day today. But it looks like we did see a fade towards the end of the hour. So we are back to kind of where we were this morning when the market gapped up. So let's kind of just to do a quick follow-up from what we talked about on last night's video. We talked about, you know, we're pretty concerned about this gap here on the last night's analysis, and also the fact that we did have my short-term moving average curling or pulling coming down, and my price kind of met with it. And you know, last time we remember what happened when the gap, this was a down gap right here, right? This is what we're analyzing back in, you know, mid November or so, and we talked about how this gap doesn't get filled, things can get hectic, and similar situation kind of happened here with this gap that was open on Monday morning. And so we talked about how it will be so much effective and expedite the process if the buyers can just gap it up. Because, you know, if the buyers just get up and fill this gap, it's going to act as resistance. Oh, I mean, it's not going to go back down like that. It's going to act as resistance. If the gap doesn't get filled, similar to here, that's when things could get very, very hectic like it did here, right? So that's why I think if we were to just get up and fill this gap, there will be a slowdown. It could take another day or two, maybe an entire week to get back up, because then resistance will, you know, that resistance would have, you know, refrained the price from continue to advance. And so, you know, make things whole lot better, whole lot smoother if you just gap it up, so you don't have to deal with this that gap area resistance, and then also the horizontal resistance there. And we actually really did gap it up here. So with this gap up, as you can see here, we're continue to cultivate that higher highs here. So keep in mind, you know, traders always like to complain about every little thing. Like, we gapped up, why couldn't it just kept going higher? Why did we have to fade? I mean, that's what the market does. I mean, it's going to gap up, you're going to see a fade, and market is going to up and down, up and down. That's just normal occurrence, right? Trust me, if you're a bull, and if this thing actually kept on going higher and filled this gap, you know, you would have seen this thing pulling back. Or if the gap didn't get filled today right here and we started stalling here, you would have seen some volatility to the downside, at least challenging this gap, maybe even fill this gap. By gapping it up today, buyers just pretty much entirely avoided all that headache possibly that could have came this week because of this down gap was open. Now that we gapped it up, we're holding above this rising pivot, right? While cultivating yet another, right, higher high. And this is what we talked about also, didn't we not? Right? We talked about this in the last month or so, right? As long as this market continues to cultivate higher lows and higher highs, a lot of times what the market does is it's going to make a move up, it's going to come back down, but it's not going to make a lower low. It's going to come down, stop short, and then it's going to cultivate that higher low and then make a higher high. And a lot of times what people don't understand is when the market goes up to cultivate that higher high, it is cultivating it so that when it does see a pullback, you have a higher chance that the market isn't going to make a lower low, but it's going to come down, but it's going to come down as much and then create another higher low, and then it's going to make a higher. So when we start to see series of higher highs, that does not always mean that, okay, now this thing's ready to go straight up. It means as the market fluctuates, right? As the market establishes its uptrend, market is cultivating that higher lows and higher highs so it can continue and resume with that trend, right? Until it breaks, until that trend changes. And we saw something like that back in, remember when things were a little bit hectic here prior to the election, when we did see that, lower highs and lower lows, right? This was when we saw that short-term downtrend. But we're now in a short to mid-term uptrend now because we also gotten above this high, right? And we got another higher high here, looking at things more of a mid-term sense. So, I think, my short-term moving average is obviously, because that's what we're talking about in last night's video also, that we gapped up right at that level here, right above the short-term moving average right there, right here. And you can see that my short-term moving average is now trading just beneath that level, which is coinciding with this rising pivot, right? And so we want to give benefit of the doubt to the buyers in the short term. Obviously, now that we're trading above my short-term moving average, and obviously in the micro term, we're just looking last couple days, also bullish, right? Just look at this price action there, and then keep in mind when I say sentiment is bullish, doesn't mean it's guaranteed that the market is gonna go higher next day. Obviously, nothing is guaranteed in the life or in our life. Same as in the market, right? Anything can happen, but when you're in a bullish sentiment, you tend to see these kind of moves so that's why something we've been talking a lot was when you see this dramatic sell-off, don't get dramatic with it. Understand the trend so that you can take advantage of those fluctuations, right? Because market is going to make a move, and then you're going to see some kind of shenanigan down move like this. Instead of coming into your dramatic emotional conclusion, you have to understand, okay, where are we as far as my short term is concerned? What about my midterm? What about the long term? Is this a level that we're going to find support? How much, and what are the probabilities? What is the sentiment right now? Once you start to understand, then you realize, well, you just navigated this market, not freaking out that somehow crash is going to come again. Somehow there's going to be a COVID decline all over again, right? So I want to continue to remain bullish, micro-term bullish, short-term bullish, mid-term bullish, obviously long-term bullish at this point. We are now dealing with this rising pivot now. We did see that level holding as support today. My short-term moving average is rising, and we got buyers opened up another gap, right? So you can see there's a gap here, there's a gap there, there's a gap here. The thing about the gaps why gaps are very important, because when the gap is there to provide support. Even just you looking at this chart right here, why was that when the price came down, do you think it's a coincidence where we found support right on that gap area? Again here, there's this gap area, we found support there, right? Is it coincidence that every time we see a gap up move, price comes back down, retest the gap area, and then price gets right back up? Retest the gap area, price gets right back up. Obviously, sometimes some different circumstances maybe this time may be different. But as far as the probability is concerned, especially when you're dealing with overall uptrend sentiment, a lot of times it's going to come down and fill that gap. Or not, many times it didn't even fill that gap because this gap's still open, never got filled, right? This gap never got filled. Even that gap area. So it's kind of a double support because a gap area is going to act as support and the gap fill area is going to act as support, right? That's why tracking gaps important. I've been doing this with you guys since the March lows. And there's so many gaps still haven't been filled. If we actually go back and look at the chart since March, you can go on your free time and look at how many gaps that are not filled. It is wrong. It is a fallacy, right? It is a wrong ideology if you think that all gaps supposed to be filled. Because I get a lot of that comment or replies on my feed, like Twitter and StockTwits and YouTube at times, where, well, those gaps must be filled, so it's going to go back down to 330. No, just go back. And I can just check right now if, which gaps are filled. I can go back right now. I mean, how many gaps, just going back to November lows, right? This is why I put these, gray boxes there. None of these gaps got filled. Look at this. And isn't that interesting? Every single time the gap area did act as support, gap area, support, gap area, support, gap area near the support, gap area, support, gap area, support, gap area, support. So if you've been saying that, you know what, yeah, these gaps must be filled, man. We're going to go back to 320. That didn't happen. We're going to go back to 330. That didn't happen. We're going to go back to 340. That didn't happen. We're going to go back to 347. That didn't happen. For sure, we're going to go to 350 some right here because, you know, that gap, well, that didn't happen. We're going to go back to 357. That didn't happen. And we're just looking at 320s right now. I mean, you can go back to 220, 230, 240, 250s. There are many gaps that weren't filled, the up gaps. All the down gaps are filled, but up gaps are still open. So when you see these kind of up gaps opening and they don't get filled, it tells you the strength of this bullish move. Let's check out that oscillator here real quick. So this is kind of what we talked about yesterday. Yesterday, it looked like it was kind of waterfall. And you see how quickly that sentiment changed, and that's kind of what I said is what we've been witnessing with my oscillator is we're seeing that my oscillator is actually kind of prematurely crossing. That tells us that bears are pretty weak at this point because bears are not able to bring the oscillator all the way back down. So basically what we're seeing is we're not seeing bears really pushing it. And because they're weak, bulls are able to bring these guys up, not at the oversold level, because that's what a lot of times, you know, what this oscillator does is designed to oscillate back and forth, overbought, oversold. But when they prematurely bounce like this, it tells you at this point there aren't many sellers. We get a quick little sell-off, buyer steps in, and you see my oscillator just getting right back up. Right? Even here. This should you should have all day coming back down, at least retest some of these, you know, oversold level, right? Instead, buyers just bring it up at a level where bears should have kept pushing it lower, right? They weren't able to do that. We saw another cross. Buyers are not really fully tired. You can see that buyers have a little bit of more room to move, little bit, right? And because you can see how buyers are putting it all the way up. Because when buyers move it, they move it all the way up, all the way up. Buyers are moving it all the way up. They're pushing it as much as high as they can, right? That's why you see strength here, strength here. They're pushing it all the way. Just bears are not pushing it all the way. They're not pushing it here. They're not pushing it here. They're not pushing it here. So we are getting to that point. We got a little bit of energy left here. Bulls can actually push a little more. So we may see some kind of follow through tomorrow unless there's some kind of shenanigan gap down or some kind of shenanigan sell off in the first few hours. If not, there's chance market can continue grind higher tomorrow. So I'll come back for you guys. Enjoy your evening. Good luck trading tomorrow.